20% of all US dollars was printed in 2020.
If this don't grab your attention and make you want to share this so other people hear this information, I don't know what is.
The governments and the central banks, they started to print money, right? Literally out of thin air. They started to print money in order to support the markets because they didn't want the market to crash and they didn't want the economy to go into depression.
Here we go. My name is Mark Harvey. This is Real Life Money Monday. You are in for a treat today. This is where we're going to be talking about, is this money even real? And what is it that you should be doing with it? That is the question. I've got a super guest on for tonight. This is going to be an absolute whirlwind. Justin, we're going to just get straight into it because there's so much to discuss here. Yeah, so give us just a brief intro other than what I've said, just so the people, if they're going to ask questions, they know your experience and they know what we can be asking on here.
Yeah, sure. So I used to study in the UK in the London School of Economics. So I was there in London many years ago. And then that got me to start working at some of the top investment institutions, such as Morgan Stanley, JP Morgan, and DBS Bank, where I was part of the trading team. And we managed, multi-million-dollar portfolios. And recently, I was also invited to be part of a team that managed $1 trillion in assets under management. And that's all great and very exciting. But I always had this question in the back of my mind, whether I should be working at a 9-to-5 job, or for me, it was actually a 7 to 10 job, 15 hours every day, and just earning a salary and helping other people build their dreams, and whether I should actually start something of my own and try to jump out of it as well. So, seeing what the institutions do and how they manage portfolios and money, it got me really exciting. And I started to try and do this out myself as well, because I learned the system, I developed the system, and I tested it with money, and it seems like it works. So I tried this on my own as well. And that actually allowed me to break free from the 9-to-5 job and achieve financial freedom. And now I start I'm spending a lot of time trying to help others do the same, people who are stuck, who are not enjoying what they do, or just simply looking for alternative sources of income. I now help them to achieve their dreams so that they can actually spend more time with their family, with their friends, and doing things that they like to do.
This is a very important message. Lots of people, they're running around chasing this cash right here, and they're wondering what they can do with this cash, or they want to save it, or they want to make cash so they can actually then go and spend it on something. Yeah, but we're going to discuss tonight maybe some things that you should be considering. So tell us what things you're into when it comes to investing.
My main focus is Forex, right? That's how I built my first pot of gold. So that's something that I'm very, very passionate about. But I do have experience in stocks, properties, cryptocurrencies, and all of that as well, because I believe you do need a diversified portfolio if you're going to survive in the market and the conditions that we're in right now.
Yeah, so any questions about Forex, cryptocurrencies, NFTs, stocks? If this don't grab your attention and make you want to share this so other people hear this information, and make you want to tag some other people so we can all collectively start to understand what's going on and know what to do here, I don't know what is. Yeah, because Justin just told me just before we went live here that 20% of all dollars, US dollars, so 20% of all dollars in circulation or that's ever been created, Justin, which one was it?
20% of all US dollars was printed in 2020. Right. And
20% were all
20%. That's
printed.
Right.
That's insane. If you like that, we're just talking about 1 year, 1 or 2 years.
Just 1 year. And
just
part
in 1 year.
Yeah.
In 1 year, 20% of all of the dollars. Like, what does that actually mean?
So in COVID, in 2020, what happened, right, was coronavirus. And that's why the entire market crashed like 35%, because people were getting scared of, hey, what's going to happen with this virus? Are we going to go into recession, go into depression? Even people were talking about depression and all of that. and the markets crashed, flash crash 35% in basically 1 month because of this. But very shortly afterwards, like within a couple of months, within 1 or 2 months, we actually reached all-time high again in the markets, right? Why was that the case when the entire world went on lockdown? People were getting scared, death rates were going high. Why was the stock market actually still reaching all-time highs? The reason was because the governments and the central banks, they started to print money, right? Literally out of thin air. They started to print money in order to support the markets because they didn't want the market to crash and they didn't want the economy to go into depression. So what they did was they
So
printed
they
money.
don't. So let me just ask you, because like people, they don't just advertise, "Hey guys, we're going to print some money so we don't, have a big crash here." So how does that come across to the people, just so they know what? So like when this happening, they can see it happening.
Yeah, so if you probably saw on the news, it would probably sound like, oh, we have a stimulus package. We're doing quantitative easing. There's going to be, a trillion or $2 trillion rolled out to support, the economy with these stimulus packages and all that stuff. So that's what it would probably sound like if you were to go on, the main financial news outlets. That's how they would call it.
Yeah. Okay. Cool. So that's what people can look out for. So, yeah. So carry on. You were saying.
Exactly. So that's why they start to print money in order to support the markets, and it just kind of got out of control, right? They were printing a few trillion here, a few trillion there, and it seems like things were not going so well. So they started to print a few trillion, and what happened was just in 2020 alone, right, and just in the U.S. alone, 20% of all U.S. dollars in circulation right now was printed in that 1 year, right? And it's not just the US, but it's also Europe, right? UK, Australia, New Zealand, basically every country you name it, they've been doing the same thing as well. So you can imagine it's like if you were on an island and there's 100 people and there's one apple. And if you don't eat that apple, you're going to die, right? How much are you willing to pay for that apple? You're going to probably pay a lot of money, right, to get that apple. Otherwise, you're going to die. But let's say then the next minute I drop 100,000 apples on the island, right? Now how much are you going to pay for each apple? Probably not a lot because there's so many apples out there, right? So it's just the same for money, right? When they're printing a lot of money, the supply of money, right? The supply of apple goes up, and the value, right? The value of these apples, so the value of the money, actually falls, right? So now as you can probably see in the markets, we have something called inflation, which is the same $1 that you had, the same £1 that you had, probably buys you less things in the economy right now because of this thing called inflation that is happening because so much money was being printed.
Mm.
And that is just the start, right? That's just the beginning. If you think about it, the governments, can they really just print money out of thin air, right? It's not magic, right? They can't do it. What's happening in the background is they're actually building up a lot of debt, right? Every single day, the government debt is building up. Okay, and in 2008, if you guys remember, in 2008, why did we see the market crash? What was the reason there was a financial crisis? It was actually because of the U.S. housing market, right? People were getting into debt. To literally anyone could have just go in and say, "Hey, I want to buy this house," and then people would lend them money to buy this house. And obviously, they didn't have the money to pay off that, and that's why it triggered a financial crisis, which was the U.S. housing debt bubble. Okay, so the 2008 financial crisis was the housing market in the US. So it was one sector in one country, and that crippled the entire financial system in 2008.
Mm.
What's happening right now
So
is
just on that, Justin, because I think people sometimes when they don't understand, they'll either totally avoid it or not get into it, or just say, "Well, I'm looking out my window right now and things are still hunky dory, so there's no need for me to do anything about it." I don't know if you've seen it yourself, but there's a film called The Big Short. Have you seen
Yeah,
that
that's
film?
right. Yeah, that's right. Yeah.
Yeah, and that's all about what happened in that financial housing situation, and it explains it pretty well, and it's pretty entertaining at the same time. Yeah, but and just coming back to inflation, because lots of people in our community, like investing in property and building property portfolios, are always talking about got to get your money to work for you, and raising investment from others that are just leaving it in the bank or not doing, only working for money, and starting to get better returns than if it was in the bank. But not just because it's nothing in the bank, but also the depreciation of the money. So we were talking before, and we were talking about like, oh, it is inflation, and it's here in the question in the bottom here. Is inflation 5%?
So that's what the governments are telling you, that it's 5%. But like, if you put some common sense into it, if all of the money that is out there, if 20% of that was printed in 1 year, is inflation actually 5%, right? The answer is definitely no. And so the real inflation rate is about 10-15% right now in the markets, but they're calling it 5% because they're only measuring, certain number of goods and services, and they're basically, taking out some of the stuff that they don't want you to see, and that's how they're calculating this number. But the actual inflation number is definitely a lot higher than 5%. So what this means is every single year, your money, if you keep it in the bank, it's not earning 0.1% in the market, right? What's happening every single year is you're losing 10 to 15% of the value if you're not getting returns on your money, right?
And traditionally, or naturally, or organically, people are not taught that, right? They're not taught how do I get money to work for me? I mean, when I first heard that, I'll be honest, I'm like, get money to work for me? What's he going to do? Like walk out the door and go to work for me? Yeah, but I think still people start to think, okay, it's about investing, or maybe it's about property, but still might not necessarily go out there and do anything.